Morning and welcome to Saxo Bank's live market call. Today is Tuesday, 4th of March. We'll begin our presentation with the overnight news bullet items. Yesterday was actually a very active day in the great number of economic releases that we saw. So let's begin with the European figures. We had both Eurozone as well as UK PMI figures for the month of February coming out exactly as markets had expected, so no surprises there. Same thing with the Eurozone CPI coming out at 3.2% for the month of February, and this is an annualized figure. Although this was as expected, it is still showing a fairly robust CPI figure for the greater euro area. Later in the American session, we started with the Canadian GDP figures coming out actually quite disappointingly, showing a negative growth in the month of December. The monthly figure for the month of December was indeed minus 0.7%, and this was even lower than the market expectations, although the markets had actually anticipated a negative growth in Canada. And this translated into Q4 annualized growth rate of meager 0.8%. So this is again giving a sign that the slowdown in the US has indeed had its own contagion effect in Canadian economy. Most importantly, however, we had the US ISM manufacturing as well as US construction spending figures, both coming out at very low figures. I'm going to mention them at greater length later in the presentation. The ISM manufacturing for the month of February was at index value 48.3, whereas the market's expectation was at 48, and the construction spending for the month of January came out at minus 1.7%, and the markets had actually anticipated a negative figure, but only in the amount of 0.7%. In the Asian session, we had Australian retail sales coming out basically unchanged from the month of December. Note that the markets or the market analysts' expectations were for at least a 0.5% increase, so this was indeed a disappointing figure, a disappointing release from Australia. Not too long after this figure, we had the Reserve Bank of Australia announcing its key target rate. This is the cash rate. And as expected, as largely anticipated, the bank actually hiked its key interest rates by 25 basis points, taking the Australian rates to 7.25%. Finally, we started off the day in Europe with some Swiss CPI as well as GDP figures, both surprising the markets on the upside with fairly robust readings. So on the market side, the Aussie dollar has been selling off considerably, and this is two things. It's a potential pause in the hiking cycle, and it's also the disappointing retail sales that were sort of having a double effect on the Aussie dollar. Euro dollar is in a range of 151.50 to 152.80. Now this is the sort of the range that we are currently trading in, and the carry trades are still looking fragile, although the worst of the carry trade unwinding seems to be over for now. On the equity side, we had a very negative day in Europe, somewhat of a mixed American session, however, ending on somewhat of a positive note at the beginning, pairing the earlier losses. On the Asian trading, we had somewhat growth losses on the account of higher commodity prices and the rate hike in Australia. The fixed income side, we've had a successive day of rallies in treasuries. This now seems to be coming to a halt or coming to an end, as the inflation fears on the long run are starting to take effect also on the fixed income contracts. Finally, commodities, still the bull run continues. Crude oil is seeing highs about $103 a barrel and is now consolidating around $102 a barrel. Silver resting about $20 an ounce, so very bullish readings on both of those instruments. So today's calendar will be quite as busy as yesterday. Yesterday's calendar, we begin the day with the Norwegian PMI figure for the month of February. This is at 8 GMT, followed by the UK PMI construction. This is at 9:30. Perhaps more importantly, however, we have the Eurozone PPI as well as Eurozone GDP figures released at 10 o'clock GMT. Bank of Canada Canadian rate announcement is at 2 GMT. The market expectations are somewhat divided between 25 to 50 basis points cut. So the current rate being at 4%, this gives us a median expectation of 3.63%. From the US, we have the ABC Consumer Confidence. This is for the first week of March, as well as Japanese capital spending for the fourth quarter later in the Asian session. Coming highlights, again, the busy calendar continues as we move on in this week. Tomorrow we have a string of U.S. figures, namely the non-farm productivity, unit labor costs, factory orders, as well as ISM non-manufacturing. It'll be interesting to see what the non-manufacturing figures will be now that we've seen pretty disappointing ISM manufacturing figures already. Finally, we have the Fed's Beige Book also tomorrow from U.S. In the Asian session on 5th of March, we have the official cash rate announcement from Bank of New Zealand. Expectations are for non-changed rates at 8.25%. Later in the, it'll be already 6th of March when we have the BOE as well as ECB rate announcements. Markets expectations for now are for unchanged rates, 5.25 in UK and 4% in Europe. But it will be interesting to see Trichet's comments right after the rate decision to see exactly what line he takes. Finally, we have the Canadian building permits and US initial jobless as well as continuing claims on 6th of March. So what's going on in the marketplace? Well, we already mentioned the rate hike in Australia. This is now rates being at 7.25%. This is a 12-year high, and the effects on the spending are already becoming visible as we had the retail sales for the month of January coming at unchanged values. So there may indeed be a pause in the cycle of hiking in Australia for the time being. The U.S. figures that were mentioned, ISM manufacturing as well as construction spending, they were indeed very, very negative figures. In particular, the manufacturing actually slumped to weakest level in 5 years, and the construction spending was lowest since '94. It was in January '94 that we had even worse figures than what we've seen yesterday. So both of these figures are basically confirming the story that U.S. is indeed sliding into recession if it isn't already in one. Finally, a note on Asian stocks. They have fallen now on a fourth consecutive day. Of course, the continuing fears of U.S. slowdown is taking its effect, but we also have the record high commodity prices taking its toll on Asian stocks as the concerns are mounting that the expenses or the costs of manufacturing for the export-oriented Asian countries such as Japan and China would be becoming unbearably high with the high commodity prices. Our recommended FX trade of the day is in Euro Swiss. We are seeing a potential bear flag formation in the pair. So we are looking for the break of 157.95 offered, and we believe that this break would open further downside. So that is our entry point, 157.95 offer. We are selling with a stop at 58.33 bid, and we are targeting 157 the figure. So this is a 1 to 3 trade, ideal for an intraday play. We believe that the risk is still on the downside in terms of carry trades and a potential weak euro level. So all in all, a very good picture in terms of a short play in Euro Swiss. On the equity side, our recommended trade today is in DAX. We are looking to sell basically a good rally, up to 67-66 level, and we are targeting 6,600 on the figure with a tight stop at 68.20. So if the resistance is taken at 67.66, we could potentially see DAX rallying to 68.20. So that's where we establish our stop loss order. Finally, on the future contracts, our trade of today is in bunds. We are sellers at 117.40 to 70 area. We have a very tight stop loss at 117.87 with a target with an initial target at 116.70 and with a secondary target at 116 on the figure. That is it. That is all for me. Thank you very much for joining us, and see you again tomorrow. Bye bye.